Greetings traders, this is Coach Robert, and this is going to be a tutorial and a step-by-step setup to create an automated trading strategy in NinjaTrader. This is a addition to the last one we made, which was quite a while ago. And in our Discord, if you choose the Coach's Library, and then you scroll down, it starts at the top, you scroll down to my name. When you click on my name, my section here in the Coach's Library, if you scroll down there, it's about the fourth or fifth one down. There is creating a bot in NinjaTrader. You can click on this to see the original. This is just a slightly different approach to this bot here. Now, this original one we created, it's actually about 2 hours long. Original one was a 3-bar reversal, but it was off of regular types of charts. In this one, I'm calling a 3 range bars reversal. And if you have ever seen me on Topstep TV or in my coaching channel in Discord, you'll know that I am a huge fan of range bars. Now, I don't want to get into too much detail with them, but what range bars do is they only plot a new bar when a certain amount of ticks up and down have been covered. Not the amount of ticks coming through as a throughput, but just up and down. Now these are set to 40 range. 40 range on NQ, there are 4 ticks per point, so each of these candles would be 10 points. We can see this candle here, the bottom to the top would be 10 points. Now if the market is only moving, this candle opened here at this level, this time is approximately 433.75. This squared opened. If the market moved up and down 4 or 5 points, and up 6 and up 8 and down 2, it's not going to plot another candle until 10 points or 40 ticks plus a tick has been reached. And what I feel about these is it takes a lot of the noise out of the market versus a time-based chart or a tick-based chart. So imagine these 3 red candles. We can see here, if we look at the bottom scale, I'll try to line this up. This here is 1846, and then this one is 1848, and this is 1852. So you can see that they're not correct. This is 46 to 48, that's 2 minutes, and then this is 52, that's 4 minutes. So this candle was plotting up and down until it closed, and then the next candle opened, and this was going up and down for about 4 minutes, and then this candle plotted. So again, it takes time out of the picture, and to make this a little clearer is you may have 1, 2, 3, 4, 5 candles in a row. Let's call this 6 candles. These 6 candles right here in a row. This could be 30 seconds, or it could be 30 minutes. It could be 5 seconds. It could be 15 minutes, because it doesn't count as time. Once the market moves a certain level, this actually went down, closed. Once it went down from the high to the low of 40 ticks, as indicated, the 40 range, plus a tick, the next bar opened. Now this one did the same thing. This one came down, up and down. We don't know how long it stayed there. We can see the bottom is 1904 and then 1906, so 2 minutes between these 2 candles. This candle moved up and down, closed to the downside by 1 tick, opened here, and then ended up closing here, opening here, up a little more, down a little more, and this may have stuck around. Now this candle here is 1906, this is 1913. So you're talking 7 minutes between these 2 candles and only 2 minutes between these. Now, what makes these, I believe, really good is that let's say you have 60 minutes and you're on a minute chart. You will have 60 candles. You may have 5, 10, 15, 20, or 100 range bars, because it's based on how far the market has moved up and down. And one of the things that I commonly use as an example is, do we profit or loss on time, or do we profit and loss on price? That answer is price. So if we have candles that are moving up and down, in my opinion, it doesn't really matter how long they go up and down, because we know that this is the high. And if there were 5 minutes in between these candles, you would see 5 1-minute candles, and this would still be the high, and this would still be the low. But we can see now when the market is ranging, for example, this section here, this is just going up and down by just over 10 points. 40 ticks is 10 points in NQ. So this is going 10, and if I eyeball this, is another 2 point. This is a 12-point candle. It closed, went down a little further, went up, closed, down. So this section right here was a range or a consolidation. And I'm looking at the bottom of the first candle. It is 10:59 a.m. Central on this particular day, and this is 11:24. Oh, excuse me, 11:12. So we're talking, this is about 13 minutes. So there would be 13 1-minute candles, or 2 5-minute candles, and 1 still in process. But we can clearly see that this is consolidating here. Now, do we know if it's going to go up or going to go down? No, we don't. I certainly don't know. But I believe it shows you a good location where there's a potential for it to consolidate there again. Now the market came down, moved around, pushed up. Now where are we? This is the same consolidation area, and we can see that it pushed up very hard, stack, 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 stack on the upside. We can see it slowing down because the wicks on the bottom side are getting longer. So this was a hard push up, and it started slowing down, recovering, and then when it finally got to this area, it shot up, but then continued down, 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 down like this. And we can kind of see that consolidation here because of this consolidation here, a reversal here because of this consolidation. It couldn't go any higher. We can see it tried to push through and it didn't. Now this time frame, this is, let's call this 10:59, so it's 11 a.m. and this time frame is 1 p.m., almost 1:30. So here we have 11, 12, 1 o'clock. So this is a 2-hour time frame. If this was a 1-minute chart, we would have 120 candles in here. So this is why I like range charts. Now to go back to the original, this here was built using time-based charts, but I wanted to do this range bar reversal because it gives us, I believe, a little more flexibility. So let's get into it. You don't need to know any type of coding for this because we are going to use the built-in strategy builder in NinjaTrader. I have already gone through and downloaded the historical data here, tools, import historical data, and I pulled down the dates from the 13th to the 18th. Today is the 22nd, first opportunity I had to make this video. So this is October 2024, this entire week, and we're going to run that entire week and see what we have. Let's get to the strategy itself. This strategy is simply a 3-bar reversal. Now what it looks for is it looks for an up candle, as we see here, or an up bar, a high closing low as a red bar, and then a second red bar. So we have 3. 1, 2, 3. The first one would be up, the second one needs to have a long wick, and then the third one would be red, and we would be short here. On the long side, we would have a down candle, a red candle, and then we would have a long wick with a green candle, and then a second green candle. These are just red and green, but whatever color is a down candle, up candle, up candle. The difference is this center needs to be going the opposite direction, and the wick needs to be larger than the body. What does that mean? It means the market tried to come down, it opened, tried to push, pushed up very hard in order to close, opened, and then closed again. So we have this consolidation, we have this push right here, and then we would enter a long at this point. Now just looking at this particular strategy, this would be a stop out because we're going to have our target way up here and our stop would be right down here. So we entered, we saw some profit, and we got stopped out, not a problem. This would not take a trade, again, because there's no long wick on this short. Now, looking at this, this actually may have not entered because we would be in this trade as a reversal. We have a green, a red, that the wick is longer than the body, and a second red. So we would be short here. Our stop would be up here, but our target would be somewhere down here. And we're going to go through those settings here when we make the strategy. So this actually would most likely not have been taken because we were in a short and getting our profit here. But we're going to run it. We're starting on this date, and we're going to run an entire week. But let's get to the strategy itself. So under the strategy builder, we're going to go through this. I already have it set up, but we're going to go through it step by step, and feel free to pause this video at any time or slow it down and review. This was the 3-bar reversal. This is the 3 range bars reversal. We choose next. You're not going to have this. You're just going to need to, it'll be new strategy, so just type in 3 range bar reversal or whatever you would like to call it. We click on next. name, description if you wish. This section here, we want to make sure we're calculating on bar close. Typically, we would want to calculate on ticks for market movement, but in this case, since we are actually looking at a bar structure, we want to have it on bar close. So it has to wait for wait for this bar to close in order to have it calculate and process the trade. One entry per direction, that's just one entry. It means it's not going to take more trades. We'll be able to set as many contracts as we would like. The errors, we're just going to stop. Use all of these default settings here. When it's closing the session, it's just going to do it after 30 seconds and so on and so forth. We have minimum bars required is 5. We could put 3, but I would like to have, as soon as you start the strategy, we'd like to see a few bars go by before it takes anything. This time in force is day. It defaults to good till close. We want it on day, so everything is closed at the end of the day. And we want to wait until flat before we take the next trade. So these are your settings for this particular screen. This side, we don't have any additional data and we don't have any custom series, so we're just going to click next. Now here is where we enter in our criteria. This section are inputs that we will set up so the traders can enter their own inputs, and this would be as far as number of contracts, as we can see, the times we want it to run, start and stop, and then target and stop in ticks. So we simply click add, and we're going to use target and ticks as the example. We click on add. We would type in our target and ticks here. It is an integer because it is a number, and we can choose a minimum of 1. We like to have more than that, and we have a default. I happen to have 10 because I don't know who's going to use this on which instrument, so that's a good place to start. We click OK, and it will show up in this area. The time, we will go here. We would type in our start time, and we would use time, and then we choose our start time by default. This is what we have here. Number of contracts, again, it's just another integer. Add, choose the integer, give it a name, and give it the default settings. Then we click next. This is where these will be empty, and this is where the actual process of the strategy happens. So to add these, we just want to click on add, and then we can enter our criteria in here. We can choose, for example, we want our position to be flat. So what we're going to do is we're going to check off the strategy, and we can check our current market position equals, and we choose this side, current strategy, market position is flat. And we click OK, and that would be our first line, because we don't want to enter a trade unless the market is flat. So all of these conditions need to be met. The market needs to be flat. Now this here is the start time and stop time. So the time needs to be greater than the start time, which makes sense. We don't want it to start outside of our time. And the time that we want to stop, it needs to be less than. So we want to make sure that we're starting and stopping. Our strategy is running between our start time and not running after our start time. So it's be greater than our start and less than our stop, which makes sense. If we wanted to run, like in this example, we're going to have it run between 1 p.m. and 2:30. This would be the start time, this would be the end time. So it will not take trades before 1 nor after 2:30 in this setup. Here's what we established for our candles. Now candle 0, as soon as the candle closes, that's 0. This is when it's in process. So if we take these 3, for example, actually this is the long position. So let's take a long position. Here is one. So 1, 2, 3. This here 0, as soon as this third candle closes and it opens here, this will be candle 0, candle 1, candle 2. It counts backwards. So this is candle 0 because it calculates at the start of the next. So it's not going to calculate here. We don't have it calculating on ticks. We have it calculating on close. As soon as this candle opens, it's going to look back to candle 0, candle 1, candle 2. So default input, they actually change it. It's just a wording that they use. This should be close. So the close is greater than the open. This would be our candle 0. The close is greater than the open. So we have an upward candle. The next candle back, the same thing. The close is greater than the open. Close is greater than the open. But in this situation, we want to add one more criteria. We have the open minus the low, which would be here, because we know it's an upward candle. So we have the open minus the low, let's call that 10, for example, is greater than the close minus the open. That would be the candle body, the close minus the open. open minus close, let's call that 10. Close minus open, let's call that 9. So this would trigger as yes, the open minus the low is greater than the close minus the open, and that would mean the wick is longer than the body. For example, this would be a really good instance of it, which means it's a valid situation. So we have satisfied the first 6 criteria. The last one is the close needs to be less than the open. And again, this is candle 0, 1, and 2. So the close is less than the open. So there we have it. Close is less than the open. Close is higher than the open. Wick would be longer than the body. And then close is higher than the open. So we have downward, upward, upward with criteria on the middle candle. If all of these conditions are met, as you see here, enter long. So we would be actually going long right at this point. 1, 2, 3, taking a long. Now the opposite would be for shorts. So his says long, and we just add these here. Add the criteria, and then on the bottom section we would click add, and then we choose order management, and we have enter a long position. Default quantity is simply, it will be 1 or whatever we choose for number of contracts. So here, order management, quantity, user input, number of contracts. Pretty straightforward. That's how we set it up. So now it's going to pull the number of contracts from what we enter in as a trader, and we will be going over that as well. So now we have an enter long. Now let's go to the short, set number 2. You can just click on the plus sign and you have set number 2. Now this is simply going to be pretty much the opposite. We want the position to be flat. The time of day to start and stop is still the same. But the first one, we wanted the close greater than the open for these two. This one, we want the close less than the open. So this would be a short condition. Candle 0, the close is less than the open, right here. Candle number 1, close is less than the open. And now the high minus the open needs to be greater than open minus close. That would give us a long wick on the top side. If that condition is true, let's assume it is true in this case. And also the final condition is the close is greater than the open, which would be an upward candle. So this would satisfy the criteria of a short. We have first the third candle back, or excuse me, the second candle back, but 3 of the series. The middle one is a downward with a long wick. The third is a downward. And then once this closed, it sees this 3 bar and it would take a short here. And our final screen is what we want to do with it. We want to put a profit target, and let's go through here. We have profit target. Our mode would be ticks. We don't want 0. We want to set user input, target, and ticks. Click, pretty straightforward. And I'll click it again, and you can see it's the same setup. Now I'll remove this one. That's our target in ticks, and there's our stop loss in ticks. Set profit target, set stop loss, stop in ticks. Pretty straightforward. We click next. We have set it all up, and then we click finish, and there we have. That is our strategy. To add it to the chart, simply right-click on the chart, choose strategies, and then you can pick the strategy. 3 bar reversals, 3 range bar reversals. Click on add. It will move it to the bottom, which we already have set up here. We can see the criteria. Here's our target in ticks, our stop in ticks, our time frame, instrument, everything is here. We click save. I have 2 of them running, and I'll go through that in one moment. But here we have them now listed. Now, while they're attached to this chart, we can see them at the top, 3 range bar reversal, 3 range bar reversal. They're both here, they're both loaded. It's attached to this chart. I'm going to right click on one of them, choose edit strategy, and now we'll pull up all those parameters that we set up previously. Target and ticks, stop and ticks. I chose 40 because that's the size of the range bars. You can adjust this accordingly. I suggest not going too large with the stop because this is a momentum strategy. We want to enter the trade. If it goes against us, we just want to get out. If it goes our favor, we'll take 3 times the size. This can be anything, but if you make it too big, it's not going to be worth it. This is a short-term, quick kind of a scalp strategy, meaning the market changed directions. You're just going to go with it and take some points out. So in this case, 120 ticks, that would be 30 points. out of it. So 10 points here as a loss, 30 points on a target. And 30 points in NQ with one contract is $600. So there we have it. Now we have our start time. We can just change these accordingly, typing in, and our stop time. This will be running from 1 p.m. to 2:30 p.m. and this video is in Central Time. Number of contracts you want per position. Start with one, and this is going to be one based on whichever input series you have. And since this is attached to the chart, if I changed my NQ to ES or to MNQ, it would automatically update the strategy attached to that chart to match the instrument being traded. We're currently on playback. This would actually just be your account that you wish to trade on, whether it's a combine or an XFA or a live account. You would have this choose in your list because of your connections. You would connecting to that account. This is on playback for the purpose of this video. We definitely want to calculate on close. This is the name of it. Wait till flat. These are all information that we set up ahead of time previously. And here is the remainder. We have all these set up. This is from previous, from the, I believe the first or the second screen. We wanted to set all this up. So here we have it. There's our strategy. And then we would simply enable it here. Now this is just showing what it would look like historically, because this is something that Ninja does. Says, oh, you would have taken these trades. And the same with this here. It would be back earlier. Here's our stop. This was a stop loss on it. Notice we got it. This was a short. There's our criteria. Up, 2 down with a long wick. It went short, and this would have been a target, a profit target right there. This is the same. Notice we used this as an example before, but it's not using it because it didn't meet the criteria. And then we have a short here with a profit target. We have a short here, which met the criteria, but then it was stopped out. So actually this perhaps would have taken a long, because this was stopped out. If you recall at the beginning, I said that looks like this was a short, but it ended up getting stopped out. So this long would be taken. However, it is outside the trade criteria. We have it going from 1 p.m. to 2:30. And if we look at this candle when this closes, if we go to the bottom, it's at 250. So this is the reason it did not get taken. So with all that said, let's go ahead and run this. Now this is 10:13 on a Sunday night, but our first trade is going to be on using this criteria. I set up 2 of them to show the difference. This is the morning time. This is 10 a.m. Central to 11:30, so an hour and a half. And then I chose the afternoon, 1 to 2:30, just to show a difference of how this works in a fast-moving environment and a little bit slower-moving environment. So what we're going to do is, since this is Sunday evening, I'm going to fast-forward this a bit, and we are going to go to just about 10 a.m. So we'll click on play. We will speed this up, and we're going to let this run on max speed until it gets around 9:30 a.m. And then I will slow it down so we can see it in process. There we are, 7:30, 8 a.m. And again, this is not going to turn on until 10 a.m. So we will let this go a little further, and then we will slow it down so we can see it in action. 9:30, let's slow this down. I'm going to 100x right now. We really don't want to do any type of testing like this on a really fast chart. It's just not going to be as accurate. Okay, so I pause. Now what we have is we have our up candle, we have our down and our down, and this wick is longer than the body, so it took a short as soon as this candle closed. Notice there is some slippage here because we were running it at a quicker speed, a fast speed here, with no problem. Now our stop is 40 ticks away, so and then our which 10 points, and our target was 120 ticks away. So if we run this a little slower, let's see what happens. And if I recall, this one does get stopped out. It does. So we hit our stop loss, so we're down a little bit. And again, this is just a demonstration. Now it's still 10 o'clock, and we're going to run until 11:30. So let's let this run a little bit more. I'll speed it up until and if we get into another trade. Here's our time. And then once we get to 11:30, here we go. Let me pause. This is another short. So we met the short criteria. It went short. Again, a little bit quicker movement here, and we're waiting for our target. You can close this at any time, by the way, as well. So as it is trading, now mind you, this is really fast. By the time this entered the trade, it's already been almost a couple of minutes, 1.5 minutes, I believe, when this trade entered to where it is currently down here. So here's our entry, 1024, and this is 1026. This is about 2 minutes after. You can close this. If you click close, it's going to stop everything and stop the strategy. So in order to close this, you would just take a position. This is a short, so you would just buy in the opposite direction. But we're going to let this run. Let me slow it down a little bit more so we can see what's going on. Okay, so we hit our target on that one. Now, because this is 3-to-1 risk reward, we lost the first one, we won the second one, so we're technically ahead by a factor of 2, which reflects here, and we can see it under this strategy. I have our realized attached here, and this one has not taken a trade because it is around 1 o'clock. Let's go this a little further, and we have another short. That was a very quick stop loss, but as soon as this was stopped out, notice it's right around here. Let me make this a little larger. So we have our down, 2 ups, longer wick. It went long. Oh, excuse me, it went short here. So it's this one actually. We have an up candle, down and down. It took a short, and then it got stopped out here. But we have another one right in a row. We have a down candle, 2 up candles, long wick, and it just took a long position. So let's see how this one plays out. Again, these are all parameters that can be adjusted by the trader prior to the strategy, or if you wish to change it midstream, you can go ahead and click on the enable here. This one is in the afternoon, so if I uncheck this, I can right click, edit, and make any changes I want, and then re-enable it. So this one was pretty good. This one made another profit target. Now, depends on what you're looking for. We took 1, 2, 3, 4 trades. We lost 2, and we won 2. So that puts us ahead of the game. Now, once this becomes 11:30, go a little bit quicker, and we'll see if another trade criteria matches. And if it does not, it will not take any more trades because it is after 11:30, and remember that was one of the criteria that were in our list. Okay, so here we have it. Those are the 4 trades for that day. This morning on the 14th between 10 a.m. and 11:30 a.m. Central Time, 4 trades, and we ended up coming out ahead of the game. So let's run this a little further because our next setup is between 1 and 2:30. So let's see what happens. I'm going to speed this up a little more until we get close to 1 o'clock, just to save us some time on this video. 12:33, 42. Okay, we'll slow this down a little more, and we will see if any trade criteria shows up. There we have it. We have a buy situation, a long situation. And we'll let this play out and see what happens. There's some consolidation, but if we're running an automated strategy, you generally don't want to mess around with it too much. That would sort of defeat the purpose of the strategy. And there we go. So this day so far is turning out pretty good. We had 2 losses, 5 wins. And this is going to be, oh, that was the only one because we are trading from 1 to 2:30. Oh, it's not 2:30 yet. I'm sorry. 2 o'clock. Let's see if it takes another trade. And won't take any trades after 2:30. 2:20, and that looks like it is it for that day. So that's not too bad of a day. Now, will it happen all the time? We don't know. So what I'm going to do is I'm going to fast forward this using the max speed until we get to the next day. So we know that we're running between 10 a.m. and 11:30. So I'm going to let this run entirely overnight. I'll do this the first time for this day so you can see it in action, and then what I'll do is I'll pause the video to get it to the next day so we don't have to waste a lot of time during this process. I'll just pause it to fast forward to the next day. So here we have it, 5:30, 6:30. We want to get to just before 10 a.m. and then we will slow it down to a reasonable rate and see what happens. It's 9:30, 37, a little closer, 45, 50. Okay, we'll slow it down some to 500. And when it gets into a trade, there we go. I'll slow it down even more. Oh, it was really fast. So I had it, this must have moved up pretty quickly at that speed. So there's one at 10. And here is a stop out. We can see, well, let's leave it at 100x speed. Now we're running this entire week. So this is something to consider. And you can change these sizes as well. Depending on the instrument you are trading, you'll probably know how much they move. This is a momentum strategy, so you wouldn't want to have, on NQ anyway, a range bars to be too large. You would need too big of a stop to work with each time. So we can see at this particular day, it really didn't do too well. The 15th, in the morning, it really didn't do too well. And it's something that as an aside, I talk about all the time, where we generally want to stay out of the markets in the morning. Now this one didn't work out, this didn't fare very well. So we won our first one here, but then we had 1, 2, 3, 4, 5, 6, 7 losses, another win, another loss, 1, 2, 3 more losses. So we can see our P&L came actually to the negative. So we gave all that back. And if we were starting it on that particular day, we would actually be down quite a bit. So this wasn't a really good day, this 15th, for the morning. So let's run this. I'll speed it up a little bit until we get to our 1 o'clock time frame. We'll see how that works out. There's 12 p.m. and let's see how the afternoon fares on this one. And there's 1 o'clock. Oh, right away we got into a trade. Let's see what happens. The first one was a loss. A little further. Speed it up a little bit. There's a second position. Looks like it's another short, and that was a winner. A second winner. And this is trading from 1 to 2:30, and there we are. I'm going to stop it there. We have 2:30. So this actually wasn't a really good day. The morning we lost quite a bit. In the afternoon we were just about break even from last time. So let's fast forward this entire day until we get to the next day at 10 a.m. And hopefully this is helping, and you can see this all in action. I was going to pause the video, but I think we'll end up just letting it run for these next 2 days, these last 2 days, so we can see the entire process in action. This is how I generally do the testing as well. The back testing and performance optimization, it's not really that accurate. Running it forward, this would be a forward test where we do a replay. It's actually much better, but we're still using playback data, and it's not conducive to the real market. And that was really quick. So let's slow this down a little bit. We ended up losing the first one at 10 a.m. and we won the second one. So we're actually recovering a little bit for this week. Now remember, these aren't just something that we just want to take one day and run and think we're going to make $1 million. It's cumulative over time. As we saw, the very first day was pretty good. The second day wasn't as great, but overall, we only had, the morning was only down, I think it was just $230, $280 or something like that, which wasn't too bad. Even as $350 wasn't bad, because we were still positive overall in our account, even after that loss. Even if after we lost a whole bunch on the morning sessions, we were still net positive between the two sessions. And here we go. We're at least starting to build back up again. Now our 11:30 is done, so we'll speed this up a little more to get us to our 1 o'clock time frame. And we'll slow it down and let it do its thing. Okay, and there we have 100x. This would be trading again from 1 to 2:30, and these can be anytime. Whatever you feel most comfortable with, whatever you're used to seeing, however the market is performing. And to be clear and reiterate that when you're using automated strategies, you do need to manage them and change them as the market. If this market was flying all over the place, we would want to use a larger range bar. So we're actually picking up more of the consolidation, and we want a really strong reversal. We don't want to get whipped around too much, which can happen in this, especially in this NQ. All right, so there's our 1 to 2:30 time frame. It looks like we only took, looks like no trades today. So here is our 1 o'clock 1300 time frame. There were no trades. It just consolidated. This is how wonderful these range bars are. Look at this. From 1 o'clock, from here to here is an hour and a half. This is why I really like these. It takes time out of the picture. And as I said at the beginning, we profit or loss on price, not on time. So let's say we enter a position. As long as we hit our target before we hit our stop, the time in that situation is irrelevant. We hit our target before our stop. That's a winning trade. Here we have it coming up on, again, this is the 17th. We have the 17th and the 18th to run. Looks like we're doing okay as a recovery on the morning session. We can see the P&Ls up here. See, these range bars just stack up really nicely. You can really identify areas of consolidation, areas of where the market reverses, and you can call those support and resistance afterwards, which is great. I just think they show it far more clearly than a time-based chart or even a tick-based chart. Although tick, I believe, is better than time. But this is my go-to, these range bars. Okay, now we're at 10 a.m. and we will see if we have another trade show up. This is the 10 to, there we go. I'll slow this down. Looks like we have a here, up, 2 down with a long wick in the center. It took a short, and again, we can stop these anytime we want, but we want to, the purpose of the automated is to allow the automation to run, and then we can adjust after the fact. So there was our 10 to 11:30. We'll speed this up to get to our 1 o'clock time frame, and then we'll watch that happen. Okay, there's a trade. Looks like reversal, instantly stopped out. Now we're going short. This has nothing to do with liquidity. It has nothing to do with price points and real necessary price action, although you could justify that as being a reversal, or what is going on in the market. Now, you would want to stop these and not trade through news, and one of my pet peeves is not trading the market open. So that would be another condition that I would have, and this is why we have these set up 10 a.m. to 11:30 Central, and then 1 to 2:30. Notice we are not trading into 3 o'clock or the mock order, the end of day chaos that can sometimes happen. So this looks like it recovered well. We had we started into the 14th, and it looked like the 15th we took some losses, took some drawdown there, but because we were so far ahead on the 14th, it ended up working out in our favor. Even though we took the drawdown, we were still maintained a net positive P&L throughout that so-called bad day on the 15th. Now here we are. This is our final day. This is the 18th. We're coming up to 10 a.m., which we will slow it down so we can see what's happening. There we go. Let's slow this down a little bit. We'll put on 500 until we enter a trade. And let's see if we capture 1 or 2 more trades for the 18th. Here we are. There's the first one, and we took a stop loss. But again, this is a 3-to-1 risk reward. So we can end up losing 3 and winning 1 and breaking even, or being ahead of the game. If we lose 1 and win 2, or lose 2 and win 1, we'll be ahead of the game. So here we are. We only took 1 trade on that morning, and it was 1 loss, versus that other day that on the 15th that didn't do real well. We ended up taking 7 trades and lost 5 of them. So it did not work out very well. Let's fast forward this to around 1 o'clock and take our final afternoon for this demonstration. Let's see how things play out. All right, we'll slow this down. There's a nice run. I like these. We have a big drop, a big reversal, and we can see this is a classic V-shaped pattern. Now remember, it didn't take some of these because it was outside of our time requirement. The final trades is 1 to 2:30. We are just about finished. Looks like we take a short and a stop loss. The interesting ones are when you get stopped up by a tick or two and then it drops and goes to your target, which this is a potential one here. Now let's see if it takes any more trades. It will not take any more trades after 2:30 due to the settings that we chose. Oh, we have 1 more long. Maybe this will be the last trade, but wait till 2:30. And that looks like it's the end of that demonstration. So we can actually fast forward this to the rest of the day until it stops using our replay data, the market replay that we had downloaded. Okay, so there we have it. There's all of our data. There we have it. Because I downloaded everything and 18. Great. So we can see that the strategy, the exact strategy that ran from 10 to 11:30, we had a realized profit of 965. But the one that traded from 1 to 2:30 was a realized 2,500 for a total of 3,560. Now, again, this is market replay, and we, past performance does not indicate future profits and future results. And we can see how this plays out. We had a few trades here and one. We had a few trades here, one or two, a few trades here. And this was our bad day that didn't work out quite in our favor. Notice it was chopped around a little bit, stop out, stop out, stop out, and that gave us a little bit of a drawdown. Hopefully this makes sense and it's understood. And these will all show up inside of the trade performance also. So you can choose the trade performance, and we can see, let's choose our days, which is the 13th to the 18th. So if we choose the 13th to the 18th, generate, we can see our report. So it shows us what we made on the long versus the short. It shows us our profit factor, which is pretty good. The Sharpe ratio, I'd like to see that a little bit higher. Percent profitable, look at this. We were just percent profitable of 38, but we are positive because we had a 3-to-1 risk reward ratio. We had more losing trades than winning trades, and again, that was that really bad day we had. And you can adjust accordingly. Once you see this, you can adjust it to the market, you can adjust it to the instrument, you can adjust it to your risk tolerance. But again, one more time to reiterate, this is not something that you'll be holding quite a bit. We can see the average time is 7 minutes right here, and it's pretty close to both. 7 minutes and 31, 7 minute 30 for long and short trades. So this is actually pretty good. It's actually not a bad setup right here, even though we had a lower percentage of profitable trades. It really doesn't mean too much since we have a higher risk reward. Now, if we did this all over again and we had a 4-to-1 risk reward or a 2-to-1 risk reward, you're going to have different results. The same would be if you had a larger stop versus a target. So that would definitely make a difference, and also the time frame you're using. If we started this earlier in the day, let's say the market opened at 8:30 Central and you chose 8:30 to 10, I can almost guarantee you that it's not going to be as effective because the market moves too far, too fast, especially NQ during those time frames. So there you have it. Hope that works out for you. And this is Coach Robert. Feel free to reach out to me in Discord if you have any questions, and wish you the best.